Good morning and welcome to Core Finance TV, and my name is Malcolm Graham-Wood and this is my CEO interview. Today my guest is James Menzies, who is CEO of Coro Energy. Good morning, James. Welcome aboard. First time you've joined us for this one, and I'm really pleased to see you.
Great, thank you, Malcolm.
Lots to talk about. As ever, I'd just like to begin with, if you could just give, for those people who don't know that much about Coro, just an overview of the company.
Yes, Coro is a small cap E&P, AIM listed. We have a production development base in Italy, which is quite a small and modest size production base. Produces gas mainly in the Po Valley. It has a long history. It's a result of merging together several companies, Sound and Saffron. And from that, we are launching into Southeast Asia. So really, we're a Southeast Asian business development company, principally.
Excellent. Now, you haven't been hanging around. You haven't been at Coro for very long, and of course, your experience that I know you from is with Salamander and all in Southeast Asia. So why has Coro moved in that direction, away from Italy towards Southeast Asia?
Yeah, well, a couple of reasons. I think first of all, Italy, whilst where you have production and licenses, it works very well. There's an attractive gas market, pricing's good, costs are good. There's obviously a well-established industry there, but growth in Italy is challenging. For E&P, it's very slow moving. It can be done, but it's got its peculiar challenges. I think in Southeast Asia, the board of Coro saw an opportunity to go to a market where you get very strong GDP growth rates underpinning big energy demand.
Yeah.
And if you couple that with a supply shortage, particularly in gas, you have a dynamic where you've got upward pressure on gas prices, and governments that are actively supportive of E&P coming into the country and investing, and clearly these countries also have a long history of E&P investment.
Yeah.
And largely because of their maturity, the larger companies are either exiting or divesting or reducing their positions, and it has freed up space for smaller independent E&P companies. Yeah. And that's really the gap that I think the Coro board see.
Looking to fill. So you announced on Monday this transformational deal in Southeast Asia. I'd like to go into some detail about it. So if you give us an idea of what it is you bought, then we can talk about what the Lengo gas field is and how you paid for it and so on.
Yeah, well, I guess the context, as I was talking about, was the opportunity in the market. When you look at what's going to be needed in that part of the world, it comes from two areas to fill the supply-demand gap. It's new discoveries and it's commercializing existing discoveries. So, we have the choice of taking our capital and putting it into exploration, or putting it to work in discovered resource. And in this instance, we're spending $12 million as a combination of cash and shares, but acquiring 152 BCF of gas that's already appraised and ready for development. And so, relative to exploration risk, we feel that's very good value, and certainly we can talk about the value of the asset itself, but this is strongly a value accretive for our shareholders.
So this is the Lengo gas field, and you paid $12 million for it,
plus or minus, yes.
And you've done that split between cash and shares.
Yes.
Just to confirm.
Yes, correct. So we're using, and as you'll see, we see this as underpinning a lot of value within Coro. So we're using equity in part because we have precious cash resources that we want to try and preserve, and in part we have to use cash for the transaction for AWE, the main seller. The gas field itself, if I can talk about that, the asset is it's in the East Java Basin, so it's in shallow water, about 60 meters. It's a carbonate reservoir. It's very shallow gas. This is at 700 meters depth below the mud line. So, but it's got a big gas column, about 80-meter gas column. Carbonate, as I mentioned, so they're called the Kujun carbonates, the Miocene age. Very common reservoir in the basin, so reasonably well understood. What I like about this asset is I see it as being quite solid in terms of its resources. I don't think we're going to get a downside surprise in terms of the technicals. The reason for that is it stands out on seismic
Yes.
very clearly, like the proverbial whatever.
Yeah,
But
yeah.
so we can see on the 3D where the gas is located. In terms of the appraisal, it's been drilled on the crest and on the flank of the structure.
Right.
And we've seen very good continuity in the reservoir units. So common reservoir, obviously,
Yeah.
common gas-water contact, common gas composition. Very well defined on 3D. So I don't see us getting a nasty surprise.
So you've got a timescale of development. You've got a platform and four
Yeah.
wells of it, and
That's right. The wells, the test, they flow at about 20 million standard cubic feet a day in the meaty bits of the reservoir. The forecast, or what we're envisaging here in terms of the development that's been approved by the Indonesians already, is a small unmanned platform, 4 deviated wells to produce plateau 70 million standard cubic feet a day.
Yeah.
And we'll have 42.5% of it. We then pipe that gas back to shore, where it gets processed, and the level of processing depends on how much of the CO2 we want to take out, because the gas has 12% CO2.
yeah, that's quite low,
Is-
but in more than you'd want, but low
Yes.
by regional standards.
That's low by East Java standards. Roughly speaking, the deeper the reservoir, the higher the levels of CO2, and we're very shallow here. So we're interested in shallow reservoirs and prospects that are shallow round about the field, of course. But certainly 12% CO2 doesn't prevent you marketing the gas at all.
And when we come back to talk about the gas sales agreement, we'll talk about that, but you can strip it out for
Yes,
people
yes.
who want none at all. So reserves and production will be 2020, did I hear you say?
Probably, we'll get on stream, I'd imagine, in 2020.
Yeah.
Probably first full year on plateau in 2021 is what we imagine. And healthy gas market, a relatively simple, straightforward development.
Yeah.
And one of this field was found in 2008. And one of the features, and one of the things I like about Southeast Asia for independent E&Ps, is most of these discoveries were made a long time ago by other people.
Yeah.
And most of them are developed by new people who come along, pick them up at quite modest prices, and can take them away and do things with them.
So you said there wasn't likely to be very much downside, which I like the sound of it. Is there a bit of exploration upside nearby? Or,
yes, there is. It's not actually within the PSC. The PSC is quite defined, but certainly in the basin near the field, yes, there is. We know which we are looking at to add a little bit of exploration spice to it. And I like that model for exploration of exploring around discoveries where you can tie in quickly, and certainly the play is well understood.
And your partners there it's a slightly complicated one, isn't it? Because somebody came in and then didn't continue, and it's Hioh and AWE.
Correct. So the deal itself, has some complexity to it, and it's a tripartite deal. So, it's difficult enough to do a deal with 2 of you when you have a third one.
Yeah.
But everyone wants to get to the same place at the end of the day, and it was a deal between a private company, Hioh, and AWE, who's an Australian player. Which was struck in 2016 and didn't close.
Yeah.
And it went sideways and it kind of stalled. And the Indonesians wanted the deal to complete. I think everyone wanted the deal to complete, but they couldn't.
Yeah.
So we've been able to reverse that deal and replace Hioh with Coro effectively, and now would bring the deal to completion.
Excellent.
Now,
gas sales.
Yes.
There's a gas sales agreement. Sort of that's your first job to do.
Yeah.
There is also there's already agreement in place for various opportunities.
There is East Java is quite an industrial zone. It's got the area of Gresik, which is where we come ashore.
Yeah.
There's a lot of industry going on there, particularly petrochemicals, also power generation, and refining.
Yeah.
So we see a number of different buyers for the gas, and indeed, I think as you mentioned, a memorandum of understanding's already been signed by one of them for some of the gas. But the operator is chasing more. There's also the opportunity to take the gas to neighbouring fields where they have a shortfall of whether they need to supply. They're contractually obliged to supply gas, and they can't. So we have other operators, who are interested in the gas as well. So all of that helps with the pricing. And we're talking about a range between 550 to 8. I think we've been pretty conservative with our range there. But even so, when we look at the valuation, that's pretty good for us.
Yeah, and your costs are quite low, actually, aren't they? I mean, in terms of you've got OPEX and your initial cost. And your OPEX cost, that puts you in at just over $1, is that right? Or?
Yeah, so in MMBTU terms, so units of calorific power generation, potential, if you like, which is not what I normally work in, I have to tell you. But we are, if we start at the gas price and go backwards, so we're talking about $5.50 to $8 for an MMBTU for the gas. To run the field at plateau will cost you about $1.10, and to develop it will cost you about $1, and we bought it for 10 cents. So we have a large margin.
And the fiscal system in the area.
Yeah, it's a production sharing contract, which was put together back in 2003. So it's got until 2033 to run. So we've got a nice long life on it. For gas, it's attractive, in terms of the contractor split with the government. And one of the features we're highlighting in this deal is that there is a cost pool of $100 million. So
I was going to ask you about that.
Yeah,
Sunk
costs. Yeah, so people, we've had a lot of questions about it, and it's worth just dwelling on that for 1 second. But effectively, the other people have spent money in this license, and they've drilled wells and shot 3D. And of course, that cost as an investor, a contractor in Indonesia, you are entitled to recover before you start splitting with the government. And that's how the petroleum production sharing contract works. And so we can recover, the group will recover the 100 million, and then we will be looking at splitting with the government. So once we're on stream, the revenue will flow to recover that cost before we get into the place where we're having to split and start paying tax. So it makes the economics extremely attractive for us.
And it's interesting. I mean, I'm assuming that this dwarfs the Italian part of Coro, and effectively, I've heard you being sort of asked about it. But I mean, there are advantages to having that Italian side because of your expertise. This leads me on to ask you about the fact that independents in the area are not few and far between, but the smaller companies find it difficult to get in. I saw you answering a question yesterday saying, we've got experience and background and so on. I presume this means it's the beginning of a lot of fast-growing, a lot of work in the area and more acquisitions, isn't it?
Well, we'd certainly hope so. I mean, I think in Indonesia there are a number of smaller players. They tend to be more domestic players than perhaps new entrants coming from outside. I think the area we particularly like is Malaysia. We've highlighted that as a place we like for smaller companies, and that is the one where it is quite difficult to get in, and where having the Italian platform is very useful.
Right, that's where it comes in.
And the Malaysians have been very impressed with what we've shown them, with what we've done in Italy. Where we are an operator, we have developed gas fields, we've drilled wells successfully with very good HSE stats. And they like that.
And that would be less buying companies or acreage and more getting in on a license round, is that correct?
Yes, correct. I mean, in Malaysia there is, crudely speaking, and I'm oversimplifying wildly here, but Malaysia is more of a dealing with the government for awards. And in that you can pick up licenses with discovered resource on that you can explore and exploit as well. So that fits our model very well. Indonesia is more about A&D, where there is a bigger market, there's more activity on that front, but we probably wouldn't be looking for the Indonesians to award us blocks. We can, but that's quite a long drawn out process.
So you want to try and get a really balanced sort of number of businesses where you maybe like this one, you bought the business, you get something in a license round. You get some production straight away, some longer term production, and then maybe a bit of exploration into the bargain as well. Yes,
correct. I mean, I like that model of a mix of we want some exploration sizzle. I think we all like exploration and can see it can add huge value, but if it's done sensibly and coherently with the rest of the portfolio. And we also like, I mean, some production would be great to give it a bit of ballast in the portfolio too.
And you were saying before we came in that the area has been fairly starved of investment. Does that make life easier for you, or?
Yeah, very much so. In the 3 years since we sold Salamander, very little's happened in Southeast Asia, and I obviously travel to the region quite frequently. And a lot of these things have been like this deal, which has been sitting there since 2016 without anything happening. And yet, you can, they're very value accretive deals to be done, but without capital, and certainly private equity is not interested in Southeast Asia, frightens
them. You just need to get the deals across the line, which I understand are quite tricky in that part of the world.
And certainly the public markets are now waking up to Southeast Asia, and certainly we've seen Jadestone raise money, we've seen Ophir make acquisitions, and one or two other things locally in the local markets which have come to the fore as well.
Good. When Coro was started, probably before your time, it was financed, I think $18 million of finance and some 2 or 3 supportive shareholders.
Yes.
And you've used some of the cash, and you're going to use shares.
Yes.
Where does that leave you in terms of, will your finance part of this, or will you further financing this can be done by debt, reserve-based lending and so on? How does that leave Coro's finances overall?
Well, certainly we wouldn't look to be financing a development of gas field directly off equity. That would be, that wouldn't be a sensible thing to do at all. Fortunately enough, the reserve-based lending banks, which you mentioned, are very much open for business in Southeast Asia. So there is a well-worked path of lenders who like this sort of project, and they're very happy to finance it. In the small cap sector, we've also seen the bond market open for people for this sort of thing. So we would be looking to debt finance the vast majority of this, absolutely. I think also, other more innovative forms of financing are around that we can combine with. You'll have heard of people talk about vendor financing for a lot of things.
Yeah, absolutely. And of course, you can use the, with the Coro as your base, you can use that with the equity and some of the cash to gear up.
Yes.
And then be able to debt finance and then bring in more and more deals. So.
Absolutely. And I think it's sensible for small cap companies to take this approach. Clearly, we don't want to over-lever, which is, we saw what happened in the last few years with that. But it's actually a sensible thing to do, and certainly would be very inefficient if we didn't.
Yeah. So just briefly in terms of management, which I always like to have a quick word about. I mean, you're here and there and everywhere, and you've got CFO in London, modest operations in London by the sounds of it, and a lot of your people out in the east. Is that right?
We have a team out in Asia who, a technical team. We're augmenting that with some commercial people, but. Really, Milan, where we have our office in Italy, is where most of the people sit, actually, and they're obviously managing and running those fields out in the Po Valley. So we're in sort of 3 jurisdictions at the moment, but here we are quite small.
And costs are low.
Costs are pretty low. I think as we grow, we would look to establish a more permanent base out in Asia, but we'll probably wait for the next deal for that.
Time is running out, I'm afraid, James, and I'd just really like to ask you to sort of finish the process by saying, I always ask the same question, but it's, how do you see the company in 12 to 18 months' time? You've started very quickly, you've obviously had a lot to do, and it's going to be a very fast-moving process. Where do you see it in the next year and a half?
Yes, well, I'm working towards building a portfolio of these projects in Indonesia, Malaysia, possibly Vietnam, but Southeast Asia, where we don't want to overstretch ourselves, but I think 2 or 3 hubs of activity where we get a balance of production, some development, and I really want some exploration spice into the story too. To keep it interesting and to help accrete value, and I'd like to buy those at very good prices.
I thought I detected that exploration spice. I knew I'd get it out of you at the end. James, thank you very much for joining me.
Thank you.
Today's CEO interview has been with James Menzies, who's the CEO of Coro Energy. It's been delightful to have him on board, and from me, Malcolm Graham Wood, on Core TV, Core Finance TV. I look forward to seeing you again soon. Bye now.